Hi, this is Simon. Welcome back to The Explainer. Today we're breaking down something absolutely massive. We are looking at a deliberate, structural financial reset that's happening right now, in 2026. Listen, this isn't some wild conspiracy theory, and it's definitely not an accident. It's a highly calculated policy shift. Honestly, if you don't know what the signals are pointing to right now, you are essentially flying blind. So let's just dive straight into the hard data, because right now, the numbers, they are blinking red.
Okay, check out this first major signal. As of January 2026, gold literally smashed through its ceiling, hitting a staggering all-time high of $5,589 per ounce. Think about that. In just 13 months, it shot up over 112%. And look, gold simply doesn't do that when the financial system is calm and happy. It does that when the tectonic plates of global finance are actively shifting.
Which brings us to signal number 2. The U.S. national debt just crossed an absolutely massive $39 trillion. To put that crazy number into perspective, it actually took the U.S. over 200 years to rack up its first trillion in debt. But today, we're piling on a new $1 trillion roughly every 100 days. It's moving so fast that the interest payments alone are now costing more than the entire defense budget.
And here's the third flashing red light. The US dollar's share of global reserves has plummeted to 56.9%. According to the IMF data, that is literally its lowest level since 1995. For context, it was sitting up at 72% back in 2001. So the trend here is just undeniable. The rest of the world is quietly choosing to hold less and less of their national savings in US dollars.
So you really have to ask yourself, if the dollar is being diluted, debt is exploding, and credit ratings are dropping, what exactly do the people running the global financial system know that you don't? What are they quietly doing to prepare? Well, we're going to reveal exactly how they're positioning themselves. Plus, a bit later in this explainer, I'll walk you through the 3 wealth traps you absolutely need to avoid. But first, to really understand 2026, we kind of need to travel back in time for a second.
We need to see how this whole thing was built. Back in 1944, delegates met at Bretton Woods to rebuild a totally shattered global economy. Their solution? Tie all global currencies to the US dollar and tie the US dollar to physical gold. It worked, launching an era of just incredible prosperity. But then, in 1971, President Nixon shocked the world by ending that gold backing. Suddenly, the dollar was backed by nothing but trust. And that brings us to today, 2026, where we are right in the middle of the third reset.
So why is this massive reset happening right now? Well, it's because the system had a fatal design flaw baked into it from day one. Back in 1960, an economist named Robert Triffin identified something we now call the Triffin dilemma. Basically, it states that if your country supplies the world's reserve currency, you have to pump out enough money for the entire world to use. And to do that, you have to spend way more than you earn. The catch is, eventually, printing all those dollars completely destroys the world's trust in them. The direct result of that flaw? A massive rising tide of printed money. Think about this. In 1971, the total U.S. money supply was roughly $600 billion. Today, it is over $21 trillion. That's not just economic growth, guys. That is massive dilution. Basically, every dollar you hold right now is worth slightly less than it was yesterday, simply because there are millions more of them chasing the exact same amount of real-world stuff.
Which brings up a pretty painful reality. This dilution isn't a bug in the system, it's a built-in feature. Inflation acts as this hidden tax. It silently transfers wealth right out of the pockets of people holding cash and earning salaries and hands it directly over to people who own hard assets. So, let me ask you, are you feeling your savings quietly disappearing right now? Drop a yes in the comments below if you are feeling the pinch of this hidden tax.
All right, moving on to Section 1, 3 massive warning signs.
Warning sign number 1. The very institutions that literally print our paper money, they're losing faith in it. Between 2010 and 2021, central banks bought an average of 473 tons of gold a year. But in 2024, that spiked to an unbelievable 1,044 tons. They literally more than doubled their buying rate. They're heavily signaling a lack of confidence in paper assets. Seriously, it's no wonder financial giants like JP Morgan are now targeting $6,300 for a single ounce of gold.
Then there's warning sign number 2. The BRICS nations, who represent about 45% of the entire global population, by the way, are systematically building alternative financial payment rails, systems like China's SIPs, built to completely bypass the US dollar. Why the sudden rush? Well, back in 2022, $300 billion in Russian central bank reserves were frozen, and that sent a very chilling message to every non-aligned country on Earth.
If you hold your national savings in US dollars, they can be weaponized against you. So they're just quietly opting out.
So, with central banks hoarding all this gold and global powers building entirely new payment rails, you really have to ask, is the US government just sitting back and letting this happen? Not a chance. So, what exactly is the government's master plan from the inside?
Let's get into Section 2, the government's master plan.
According to the source material, there are 3 very specific policy moves underway right now. First up is what's being called the Mar-a-Lago Accord, which actively aims to deliberately weaken the dollar to make U.S. exports cheaper. Second, there's a big push to deregulate the banks, rolling back a lot of post-2008 rules to make lending easier and to integrate digital assets. And third, the 333 framework, which basically uses tariffs to target 3% GDP growth, a 3% deficit, and 3 million extra barrels of oil production.
Let's zoom in on that first point for a second, because it directly impacts your wallet. Impartially speaking, a deliberately weaker US dollar means some short-term pain for consumers. Every imported good, your smartphone, your clothes, car parts, they all get more expensive. But the trade-off here is that American manufacturing could become globally competitive again, which potentially brings factories and jobs right back to US soil.
So the rules of money, they are actively being rewritten as we speak. The entire board is shifting. And that brings us right back to that open loop I mentioned earlier. As this massive transition completes, are you going to be caught totally unprepared? Will you fall into the 3 wealth traps? Let's make sure you don't.
Here we go with Section 3, the 3 wealth traps.
If you want to break free and protect your purchasing power, you have to dodge these 3 specific traps. Trap number 1 is the cash trap. In a world with high inflation, just sitting in cash in a basic savings account practically guarantees a slow, certain loss of your wealth. Trap number 2 is the concentration trap. Having 100% of your wealth in one single currency inside one single country leaves you entirely exposed to these big policy shifts. And then we have the third trap.
The timing trap. Honestly, this is the most dangerous one, and it destroys the most wealth. People see this reset happening, but they sit on the sidelines waiting for that perfect moment to act. Listen, trying to predict the exact minute of a monetary regime change is literally like trying to predict an earthquake. You can feel all the pressure building up, but you can never time the exact snap. You just have to make sure your house is already built on a solid foundation before it actually hits.
Which leads perfectly into Section 4, the playbook, how to protect yourself.
All right, here's exactly where the data points us for wealth protection. First, hard assets. Things like gold and real estate act as physical insurance against a falling dollar. Second, U.S. manufacturing and energy sectors. These stand to benefit directly from the new government tariff and production policies we talked about. And third, global earners. You want to look at companies that make their money worldwide, so their success isn't totally reliant on the strength of just one single currency. Now, the golden rule of navigating any financial crisis is actually incredibly simple. Don't own anything you can't explain to a 12-year-old. The financial industry absolutely loves to make things sound super complex just so they can charge you high fees. But real, lasting wealth protection? It's simple. Seriously, if you can't explain why you own a specific asset in plain English, you probably shouldn't own it at all.
So, the absolute most crucial takeaway from this entire explainer is urgency. The global monetary reset is not some distant future theory. It is happening right now. And remember, the last 2 times the global financial system was fundamentally restructured, back in 1944 and 1971, the people who actually understood the new rules in advance built massive generational wealth. The people who just waited around for the music to stop, they were left scrambling for a chair.
Well, you now have the data. You see the warning signs flashing, and you know the government's actual plan. So, I have one final, incredibly important question to leave you with today. Are you positioned before the reset, or are you just waiting until after? I really want to hear your strategy on this. Tell me in the comments below right now. Keep learning, stay focused, and I'll catch you in the next explainer.